Bank of Japan has essentially created an environment where the biggest holders of JGBs don't want to hold JGBs until the Bank of Japan stops being irrational. So the Japanese central bank is raising rates because it believes that the Japanese economy is under an inflationary experiencing a true inflationary problem as they understand inflation, which is tight labor markets, expectations theory. But either way, the Bank of Japan says we still have an inflation problem. Therefore, short-term interest rates are going to be increasingly uncertain. That's the term they always use. So if you're a large holder of long-term JGBs and the Bank of Japan is saying, we don't know when we're going to stop raising rates, what are you going to do? Well, I'm going to sell my JGBs today and I'll buy them back when the Bank of Japan finally gets to where it is it's going to go. Or market circumstances force the Bank of Japan to come back to reality and say, okay, you're not going to go any higher. So what has happened at the long end of the JGB curve is all the pension funds and insurance companies in Japan have gotten out of the market. I think it was Mizuho that said, very publicly said, we did this. Bank of Japan made us do this. We cut our JGB exposure by 2/3. 2/3. One of the biggest holders of JGB said, we're going to sell our JGBs today. And then they said this, we're going to buy them back once the Bank of Japan is finally done with whatever it's going to do. So as I've been telling people more recently, the biggest source of uncertainty in the marketplace is central banks when they're supposed to be the opposite.